Inflation has soared in recent years. In the last 4 years alone, inflation has risen 18%, according to the Bureau of Labor Statistics. And, with the Department of Agriculture predicting that food will rise another 7.8% in 2023, it looks like the inflation crisis will not ease up anytime soon. The same is true for gas. With OPEC countries stubbornly keeping production low, and China increasing their demand for oil, the United States will likely have a tough time outbidding the billion-person economy for precious oil. So what can you do? How does your wealthy neighbor still manage to buy nice things in this economy? The biggest misconception about billionaires is that they are sitting on piles of cash. The reality is that the overwhelming majority of billionaire money is tied up in investments, with more than half of their money invested in their own company. Additionally, billionaires have about 20% of their money invested in single stocks, with an additional 5% or so invested in mutual funds. Those with a net worth of $10 to $100 million also place roughly half of their money in either their personal company or mutual funds in single stocks. This differs greatly from those with a net worth of $100,000, where most of their money is in their house and very little of it is in stocks or their own company. Now, why do the ultra-wealthy place their money in stocks and mutual funds instead of banks? It's because the profit on stocks averages between 6.5 to 7% annually. That's adjusting for inflation and also reinvesting the dividends. Analytics firm McKinsey analyzed the yearly return of the S&P 500 from 1871 through 2019, and found that the average return, adjusted for inflation, hovered between 6.5 to 7% a year. That means that, every year, billionaires and ultramillionaires make 6 to 7 cents on every dollar by throwing their money in stocks, including shares in their own companies. They then leverage these stocks to buy the things that they need. For instance, to purchase Twitter, Elon Musk sold his shares in Tesla. But there's also an added benefit when it comes to taxes. The capital gains tax on stock sales is only, at most, 20%. But most of the ultra-wealthy are likely only paying 15%, since the cutoff is a profit of $492,300 a year. This significantly lower tax amount also means that ultra-millionaires and billionaires are barely paying any taxes on their money's appreciation when they sell it. But most billionaires and ultra-millionaires don't sell their investments, and this is key. Because profits from the stock market are not taxed unless you sell the stock. So, every year, billionaires and ultramillionaires make 7 cents on every dollar that is completely tax-free. By using the stock market and shares of their company as a bank, the ultra-wealthy accumulate strong interest on their money that outpaces inflation while also not paying any taxes on it. This is the equivalent of getting a 7% raise that is completely tax-free every year for the rest of your life. And even if you do happen to sell your stocks, you can even keep the profits on long-term capital gains without paying a cent in income tax. You just have to make less than $44,625 in income from the stock sales, and you will pay nothing in taxes. However, it is important to note that these are the long-term capital gains taxes, which mean your investments need to be parked for more than 1 year before you sell them. During the first year, you will pay the normal federal income tax on your profits from the stock market if you sell your stocks. So, the way the ultra-wealthy increase their wealth is through investing in their own company or in the stock market, where it grows tax-free at a 7% profit after inflation. They then sell the stock at a significantly lower tax rate to buy the things they want. Thanks for watching. If you liked what you saw, please consider supporting us at buymeacoffee.com/morningwoah.